Ashish Kyal of Wave Strategy Advisors joining us.
What about the levels? Where do you see the stock going? Should he keep it for the long term?
Yes, absolutely. If you look at the stock, I think there has been a very spectacular rise that we can see on the upside. It has formed a very classic rounding bottom or a cup and handle pattern, giving a breakout of it today, nearing the above that 52-week high. So we can expect it to move on the upside further towards the level of around 23,800, and on the downside one can maintain a stop loss of around 20,400 level. So the overall tone is positive. It is just breaking out. So I think the trend has just begun over here.
Sure. All right. So we'll move on to the next.
But let's talk about the technicals as well then, Ashish. What's your view? In the last 6 months, when you look at TVS Motors, that's come in and gone up 26%. Last year also it's run up 47%. From here on, are you expecting a further upside? The viewer has bought this at 1,340 rupees. So what should they be doing?
Yes, indeed. Because if you look at the overall trend, first just a disclosure, we do have holdings in TVS Motors, and the overall trend for the stock, if you look at from a yearly or 3 years perspective, also it has been in a secular bull market. We can see some consolidation, and eventually the breakout should come on the upside. Stock is finding good support at its 20 days average, and I think the third wave is going to start, which is going to be very powerful. So hold on to the stock here. 4,500 can be the target. And on the downside, one can maintain a stop loss of around 3,500 levels.
Okay, surely keeping an eye out on those stop loss levels as well. That is important to watch out for. But let's move on then to the next query. This one is come from Bhuvan, who's writing to us from Gujarat. He's holding 20 shares of Siemens, and it's at a price of 3,892 rupees. Now, he wants to know the long-term view and the target level also that one should watch out for.
So what should he do? Should he book his losses, or should he add more?
No, my suggestion would be to possibly average, because the stock is consolidating. It's showing more of a time correction since June of last year. It was around 3,400 on the upside. Support on the downside is around 2,900 levels, and it has been consolidating within that zone. The time horizon for future is going to be at least for a year or more, and we can then expect the stock to give a positive breakout, possibly head towards the level of 3,800 from medium-term perspective. And on the downside, I think 2,900 should remain protected.
But on the technical front, TCS, what are the levels that they should look out for? Bought it at 4,000. Target as well as any stop loss or average, is that an option, Ashish?
If you look at TCS, the stock has disappointed the investors for quite some time now. And every time it looked like possibly reversing up, it reverses down because of some of the other news that comes from the AI space. On the downside, the support for the stock is around 2,800. So that level should remain protected. And on the upside, the target can be around 3,600 levels. But one has to be slowly and steadily nibbling out the stock, not expecting much from here. The IT space is trying to find out the the fair value around playing around here, and the next 6 months can be challenging, but post that we should start improving.
Welcome back. You're still with us on Your Stocks, and on the show with us, and Ashish Kyal of Wave Strategy Advisors to answer all of your stock queries. So the next question that's coming in is Deepak Malik, who's writing to us from Bombay. He holds 300 stocks of Persistent Systems bought at 4,900 rupees a piece. He has to exit the stock on or before October 2026, as he has some upcoming expenses.
Ashish, levels that they should keep an eye out on. They said that they have to exit by October 2026. So it's a very short-term outlook in terms for the next 3-4 months that we should watch out for. Do you think it's going to go higher up from here on, or should they just exit if they need the money right now? They have some upcoming expenses they're talking about.
See, if we look at the stock and if you look at the short-term structure, it has been quite some time since approximately January. The stock has not managed to even move above its 20 days average. It has been failing to do that. So there are no signs of positivity. If had it been more than at least a year, then holding on to it would have made sense. But right now we can clearly see it is in a downtrend, and there is a possibility the stock can even move lower. But one can maintain a stop loss of around 5,650. That's an important level to watch. In case it breaks 5,650, then exit out of the stock, because the money will be required soon. And on the upside, the stock has to break its at least the 20 days average, which stands at 6,200, which is still far away. So my suggestion would be maintain the stop loss of 5650 and possibly use the pullback to exit.
All right. And, the next query is coming in from KS Rao, who writes to us from Guntur in Andhra Pradesh. He wants to know whether it is the right time to invest in Delhivery at the current price. Ashish, I mean, you can talk about some levels as to when he can enter the stock in its current situation.
Yes, if you look at Delhivery as a stock, it has managed to show a very sharp bounce back from 380 levels to 460, now forming a flag kind of a pattern which can result into a positive breakout. So the overall tone for Delhivery is positive. I think he can enter at the current levels, maintain a stop loss of around 415, and then expecting a target of 480. So the overall tone is positive. Entering buying on this looks a good strategy.
Okay, let's move on then to the next query for today. This is coming in from the Auto Pack. We have Gayatri, who's writing to us from Tamil Nadu. She's holding 152 shares of M&M. This is at a price of 3,201 rupees. She wants a short-term and long-term outlook. So,
Ashish, what levels are you looking at for this stock?
See, M&M has shown a very good move on the upside. The stock recently corrected, but showed an island reversal on the downside, which means that there was a gap down, consolidation, and a gap up, and sustaining that. So that's a very, very positive sign. We can expect the stock to move towards the level of 3,900, which is 52-week high, and possibly higher from here on. On the downside, the gap area can remain a good support zone, which is around 3450 levels.
okay. Ashish, this 3,900 is short-term or long-term targets?
These are short-term targets, and from a medium to long-term perspective, we can expect the stock to even cross 4,000 levels.
Okay, even cross 4,000 levels.
4,500 levels. 4,500 from a long-term perspective.
4,500 from a long-term perspective. We'll keep an eye on those levels over there. But Ashish as well as Gaurang, thank you so much as always for joining us on the show. That was the last query for today. It's always a pleasure having you all here as well.